All right, let's dive right into this explainer. Because look, if we're being completely honest, navigating the Canadian insurance landscape can feel like trying to find your way through an absolute maze. It's just full of jargon, endless policies, and all that tiny fine print. But today, we're going to completely demystify the whole shebang. We're looking at a brilliantly structured guide from protectyournest.ca that gives us a super simple, foolproof framework to finally organize all this chaos. There's this quote that goes, "You were handed leaves without ever seeing the tree." And honestly, that hits the nail on the head. That is exactly why so many of us feel totally overwhelmed when shopping for coverage. You sit down, you start looking at your finances, and bam, you're bombarded with individual policies. Term life, tenant insurance, critical illness, auto coverage. It's a lot. It's totally natural to feel lost because you're only seeing those individual leaves. Nobody ever zoomed out to show you the actual structural tree connecting them all together. Well, today, we're looking at the tree. So here's our quick roadmap for today. We'll look at the insurance tree itself, the ultimate sorting rule, the life and health branch, the property and casualty branch, finding your coverage gaps, and finally, the right coverage order. Grasping this clean taxonomy only takes a few minutes, but I promise you it'll empower your financial decisions for the rest of your life. Starting with Section 1, the insurance tree. Now, what's really interesting here is that this massive, complex Canadian insurance industry, it actually isn't some tangled web of endless categories. Believe it or not, every single insurance product falls neatly into one of just two branches. And I really want to emphasize that these aren't just casual marketing buzzwords made up for a fancy brochure. They are strict legal and regulatory divisions. This binary system literally dictates how companies are licensed, how your advisors get certified, and exactly how you're protected as a consumer. Moving on to Section 2, the ultimate sorting rule. Okay, so how do we actually know which branch is which? Well, there's a single, incredibly simple question that instantly categorizes any insurance product ever created. Ready? Is this product protecting a person or a thing? That's it. If the financial risk is attached to a human body, meaning your life, your health, your ability to earn an income, it goes to one branch. But if the risk is attached to a physical asset, like your house or your car, or even your legal liability to other people, it goes to the other branch. Every product ever made sits cleanly on one side of this line. And these represent two totally different regulatory worlds. On one side, we've got branch 1, life and health. This protects people, and whoever is selling it to you needs a specific life license. On the flip side, we have branch 2, property and casualty, often called PNC. This protects things, and it requires a completely different PNC broker license. This right here explains why a life insurance broker and a home insurance broker are totally different specialists. They're regulated by different bodies, and quite literally, they are not legally allowed to do each other's jobs. All right, let's get into Section 3, the life and health branch. Let's zoom in on branch 1. The life and health branch covers basically every financial risk tied to a human being. Here are the specific leaves on this branch. We've got term life, giving you a tax-free lump sum for a set period like 10 to 30 years, and permanent life, which lasts a lifetime and builds cash value. But take a close look at disability insurance. The source data shows a staggering 1 in 3 Canadians will be disabled for 90 days or more before age 65. 1 in 3. It replaces your income if you can't work, but wildly, it's the most underused protection out there. We also have critical illness, health and dental, travel, and long-term care. And wow, with nursing home costs running around $5,000 a month in Canada, that is a massive financial risk tied directly to the human body. Now, you might also hear the industry term A&S, which stands for Accident and Sickness Insurance. A&S is just a regulatory subcategory securely tucked inside the life branch. This is super important to grasp because things like disability, critical illness, and extended health protect the human body. they live here, which means if you need to protect your income from a sudden health crisis, you absolutely have to go to a life licensed advisor. A home insurance broker legally can't help you with it. While we're still hanging out in the life branch, let's compare mortgage and creditor insurance to personally owned term life. When you get a mortgage, the bank is going to offer you creditor insurance. But here's the kicker. With creditor insurance, the bank, the lender, is the actual beneficiary. Plus, the payout decreases as your mortgage balance drops, even though you keep paying the same premium. On the other hand, a personally owned term life policy pays your family directly, keeping that payout flexible and completely consistent. In fact, the Financial Consumer Agency of Canada strongly recommends understanding this exact difference before you sign anything at the bank. Same regulatory branch, vastly different products. Pivoting over to Section 4, the Property and Casualty branch. So let's check out the other side of the tree. Branch 2 is Property and Casualty. The crucial point to remember here is that this branch is 100% dedicated to protecting physical assets and your legal liabilities. So what are the leaves over here? We've got home insurance, condo insurance, which, by the way, only covers your interior, and tenant insurance. And honestly, tenant insurance is wild because it typically only runs about $15 to $25 a month. It's probably one of the most affordable yet totally overlooked products in Canada. We also see mandatory auto insurance, liability, and pet insurance. Wait, why is pet insurance in this branch? Well, because legally speaking, pets are insured as assets, not people. But for $30 to $60 a month, it'll absolutely save you from a surprise $5,000 emergency vet bill. Okay, I want you to just let this massive number sink in for a second. $8 billion. That's a lot of zeros. According to the source material, Canada recorded over $8 billion in insured catastrophe losses in 2024. That is a record-breaking figure, completely driven by floods, wildfires, and severe storms all across the country. It really underscores just how absolutely crucial it is to have proper home and property coverage on this branch. There's also a pretty important distinction within the P&C branch when it comes to auto insurance. 4 provinces, British Columbia, Manitoba, Saskatchewan, and Quebec, operate public auto insurance systems. That means you buy mandatory coverage directly from a public insurer. But the rest of Canada relies on the private market. So in those provinces, you'd go through a private P&C broker. All right, Section 5, Finding Your Coverage Gaps. Now that we've got a solid grip on the 2 branches of our tree, let's make this a bit more personal. We're going to do a rapid-fire personal audit to expose any potential vulnerabilities you might have. Ask yourself this right now. If you couldn't work for 2 whole years, could your household survive on savings and your partner's income alone? Take a second. If your honest answer is no, well, you've just exposed a pretty massive disability insurance gap on the life and health branch of your tree. Okay, let's try another one. If your home burned down today, could you comfortably cover your living expenses for 3 months while it was being rebuilt? If the answer is no, then you just uncovered a major gap in your property and casualty branch, specifically when it comes to additional living expenses coverage. Now, if answering those questions made you tense up a little bit, hey, don't worry. Acknowledging those vulnerabilities is exactly how we start fixing them. And because you now understand the 2 separate branches, knowing your specific gap tells you exactly what kind of licensed professional you need to call. You either need a life license advisor, a P&C broker, or maybe you can find an advisor with dual licenses to handle the whole shebang for you. Let's move to our final piece, Section 6, the right coverage order, and see how this all builds together. The source article lays out this highly recommended step-by-step roadmap for young Canadian families to actually build their protection. Here's the ideal order. Step 1. It's an emergency fund, We're talking 3 to 6 months of expenses parked in a tax-free savings account or a high-interest savings account. Sure, it isn't technically insurance, but it's the absolute foundation that covers your deductibles and waiting periods. Step 2 is disability insurance to protect your single greatest asset, your income. Step 3 is life insurance, which becomes absolutely essential the second you have dependents. Then for step 4, we jump over to the P&C branch for home or tenant insurance to protect your physical stuff. Step 5 is health and dental to patch up those provincial gaps. And finally, step 6 is critical illness, giving you a meaningful layer of financial flexibility during a health crisis. And that wraps up our explainer. We just took the incredibly complex world of Canadian insurance and boiled it down into one simple tree with 2 distinct branches: life and health for people and property and casualty for things. So you've got the map. The only question left to answer is, do you know where your own family's gaps are? Take a good look at your policies, figure out which branch needs a little reinforcing, and take action to protect what matters most. Thanks for hanging out with me for this explainer, and keep on learning.